And private capital funding, Haley just covered this with Quest IRA. Now, this is the way that you really get the investing game off the ground, right? There's a couple different ways that you can structure deals. Obviously, whenever you're borrowing private capital, you always want to give that investor a first lien deed of trust that secures their capital. But you can also negotiate the terms of that loan. So typically, when you're doing fix and flips, it's somewhere between a 6 to 12 month term. Sometimes it's interest only. Sometimes there's an interest rate on there. You can accrue the payments, which means that you don't make a monthly payment until you pay off the loan. You can do monthly payments. There's a lot of different ways that you can structure a private capital loan. So another thing you can do with your investors, if you're going to give them an interest rate, you can say, hey, as for you funding the deal for us, I'm going to give you an equity kicker. So we're going to give you 10% of the net profit on the back end. Or you can do like a joint venture equity split, which I do with some of my investors. Whenever I bring an investor an off-market property and I'm looking for them to put the capital up, I want a piece of that deal, not only just pay them a small interest rate, because if I give them equity, their rate of return is going to be significantly higher than just paying them 10% interest. But here's the deal. Haley touched on this, which I'm going to talk about Quest quite a bit throughout this because it ties right into this strategy, which is buying, renovating, and reselling. But you have to be transparent with people. You have to build relationships, and this business is all built off of trust.